Oil prices edged up again on a renewed fears that the Israel-Gaza war could escalate into a broader conflict in the Middle East. Tensions in the Middle East have escalated after Tuesday's airstrike hit al-Ahli Arab Hospital in Gaza City, killing more than 500 Palestinians. However, Israel denied responsibility for the attack. The Arab world cannot but respond to such events. The mass killing at the hospital has spurred widespread international condemnation and a day of rage protests at Israeli embassies in several countries. Notably, it's about the world's top oil-producing region. Even a slight escalation of this military conflict could lead not just to oil supply disruptions, but even to suspended deliveries. If tensions do not subside in the near future, oil prices will most likely rise to $200 per barrel. At the same time, industry data showed that U.S. crude oil inventories fell by a much steeper than expected 4.4 million barrels last week, compared to the forecast of a 300,000 barrels draw. Thus, news releases remained the main driving factor shaping market trends. According to the trading chart, Brent crude has hit a new local high amid a new burst of activity. In this situation, speculators will continue to focus on the fundamental factors when making trading decisions and lock in profits on long positions only in case of extremely overbought conditions. Likewise, gold is trading upwards on rising global risks, provoking a flight to the safe haven assets. Thus, the yellow metal has rallied to $1,940 per ounce, a one-month high. In the event of further escalation of the Palestinian-Israeli conflict, gold may rise not only to the level of $2,000 per ounce, but even above. Meanwhile, the ruble remains stable. Despite local bursts of activity, the quote is still trading in the range of 97 to 98, reflecting uncertainty among market participants. Therefore, the best trading tactic is to use a breakout strategy, looking for strong momentum that enables the quote to break out of the range. All eyes are now on Russian President Vladimir Putin's trip to Beijing. The leaders of the two countries are expected to discuss growing economic and trade ties between Moscow and Beijing, as well as many other Asian countries. Obviously, Western sanctions have inflicted considerable damage to the Russian economy, and shifting the focus to the other countries has not been so lucrative. So this trip could improve the situation for key sectors of the Russian economy, especially in terms of financial transactions and their technical execution, as well as a regulation. If these expectations are met, the ruble will most likely enjoy steady gains. Otherwise, there is not much that could stop the dollar from rallying above 100 rubles. However, the details of the meeting will probably come only tomorrow. Until then, the market situation is expected to remain unchanged. And that's all for now. We continue to follow developments in the financial markets. Subscribe to our channel and follow the news with us. And see you soon.